Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and this stream's about integrating Bookmap order flow tools with auction market theory using the volume profile as a chassis in the intraday developing time frame. It's based on structured trades that are available to everyone in the Bookmap Discard Trader Lab community. There's no cost for it. It is a community of like-minded traders who come together to leverage their collective experience. It doesn't matter how long you've been trading or how you do your thing. What does matter is that you're interested in developing a sustainable business. The other part of this is to try to differentiate from what we think this business is to what it might actually be. And there's quite a gap between what we imagine trading to be and what the actual business model is that has been proven to be successful. Now, the model that's been proven is gaming theory. In other words, how casinos operate. And while we all want to think we're not in the gambling business, we actually are. The differentiation is, do you want to be the house or are you going to be sitting with the gamblers? So we always take risk. So we're always, quote, gambling. The difference is the casinos only play games that have an edge that favors them, whereas the gamblers, who still have winning hands, do not have the edge. So in spite of it all, over time, the house extracts the dollars from the gamblers. That's the proven business model, even though the casinos pay the gamblers. So we are in the same business. So if we can differentiate how we look at the business and then how we solve for randomness, because the market is 100% random 100% of the time. And I know many of us come in the business with the idea that we're going to predict what the market is going to do. The prediction concept comes from the need to avoid risk and to, quote, be right. The right is not about what the market does. The right is about the edge. And you really need, in my opinion, to differentiate between the two, because it's not being right. It's just that you follow a plan that has an edge. The casinos follow a plan that has an edge. They still pay the gamblers. So was it right when the gamblers get paid, or was it wrong? Well, we see win and lose as right and wrong. It's not. It's the edge. I hope that makes sense. And if that resonates with you, in spite of, by the way, all your effort and all your curve fitting and all your prediction, and you still come back to the same place in spite of winning trades, remember, gamblers have winning hands, then maybe it's time to take a deep breath, reevaluate. And if you keep waking up in the same place, besides all your effort and your winning trades, but you're not sustainable, then I would suggest put the foot on the brake, take a deep breath, and visit the Trader Lab. And there's a link in the bottom of YouTube if you're inclined. There's no cost for it. Nobody will solicit you. You will not be harassed. And it's a terrific community of serious traders. And it is about the business of trading. We have a lot to talk about as usual, and it's pretty important what's going on today and how it relates to Friday's substantial sell-off. We'll talk about that. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. By the way, grab a pen and paper, take a few notes. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is really about the business and about the structure, because the business of trading is not predictive. Don't we all wish we could predict anything in this? But we really can't. So if we don't focus on prediction, maybe we should focus on something called alignment. So what I always say to developing traders in Trader Lab is, this is not a business of being right. It's not a business of prediction. It is a business of alignment. So what we're trying to do in this business is define the condition of the market. And then depending on how this manifests itself, and remember, this is real-time day trading, so it's always changing. So we have to stay in alignment. And how do you do that? Well, there's a narration process that I've shared in the Trader Lab, and that as the market develops intraday, subject to the time frame that you trade in, and we all trade differently in the sense of time, but the mechanics of the market are generic. So you can be a short-term trader, very short-term, or you can be trading more intraday developing swings where there's more range. There's not a right or wrong. What there is structure. And if you define the structure, then you plug it in or fit it into the range that you perceive the market may go to, and then have triggering structures, targeting processes for getting risk neutral or maybe ultimate targets, and then trade management along the way. Those are the pieces. And each of those pieces have statistics attached to them. So when you isolate a specific trade that's in alignment, now you're waiting for the trade. We're not playing a video game. Now, I know sometimes it might feel like that to you, and you are going to be stimulated psychologically and emotionally to play a video game. That's FOMO, and then also fear of loss comes into this and all of that. So that's a different conversation for another time, and you can come to Trader Lab if those elements are important to you. We work on them all the time. Now, by the way, thanks for visiting Trader Lab today. Well, let's get into this. Now, let's go back to the key to this. We had a substantial sell-off. We tested this low. We did not take it out. This was a big down day. So this was a current new all-time high at the time. We failed up here at 17, an important price in the ETH. We had the Acapulco cliff dive. Then we had continuation. I think this was a Friday. This was a Monday. So sellers. And then we found too low. We cleaned out everybody who was like stops that are under there. Oh, it's ugly. And this was our retail price the last time we were down here. And we overshot it. But we didn't get this. And then we got short covering. And we closed up near the high of the day, or at the high. So what that told us was we found too low. And this is the high volume price, 26.75-ish for this day. And what do we know about today? Shorts were in here on that day, and shorts were still in here and up here, which was the all-time high at the time. So what do? We open, we come down and test this retail price. Now, what does retail mean? Let me translate. Shopping. When you shop in the store, there's something called a fair price, and high volume runs through there. So that's retail. Buyers and sellers agree. We do a lot of volume. Your mustard costs $1. There you are. But what happens if mustard is too low over here? Then we're going to test it and go, oh, that price is no longer valid. We got to find a new price. Well, we find 50 is now the price here. And what happens here? We open. And now we have what's called a trend day up. In other words, we're out of here. And what are we doing? The shorts, remember, that are sitting in here. Hasta la vista, squeezeteria. Thanks for playing. We'll catch you tomorrow. And what's the recent all-time high? It's there. What's above this high? Stops. So what might we suspect? Trend day up. What about this day, Friday? Continuation. Why? Previous all-time high. What else? Buy stops. What happens if you get up there? Buy yours. Okay? So the stops were still here. So on Friday, we're looking for, there was a gap, that a new all-time high going to the moon. But what else do we know about Friday? Responsive selling. The possibility is, are you going home over the weekend if you're long and you're sitting through all this? Might you take a few dollars off the table? Maybe this is the all-time high. Maybe it isn't. Do you know? I don't know. Can you predict the high of a bull market? Me, not so much. How are you doing with that? How are you at predicting the high or low? And I'm using the term predicting. How about this isn't a business of predicting? It's a business of alignment. So what do we know? Let's look what we know. We know we got a new all-time high. Oh, my goodness. And we know we did the Acapulco cliff dive. And what did that accomplish? Belongs in here, who are in this trend day. Their stops are under here. What else do we know? Let's come back here. 64.50, too low. What happened over here? 26, too low. Is it possible if we come down here, and who knows, this is too low? What do we know about this day? And I think this is about, I've got it covered up. Hold on. You're going to find this interesting, I think. This is 64.79. Watch how the pieces come together. Watch. This is the auction. This is no indicators. This is the auction. Now let's come back and look again. This is a market profile. They're the same things. This is that 50 area, too low. We didn't touch it. This is the retail price from Friday. It's around, a little hard for me to see it, but around 90. And this is called a single. It's around 25. This area in here is a low volume zone. And it's important because you'll notice when the market is doing its thing, it rotates. That's an auction, an active auction. Oh, it's too low. Oh, it's too high. I'm not paying that retail. So it does this kind of thing. And you'll see this in all fractals or time frames. Too low, or at least retail, fair. And what's this? This low volume zone was not auction. In other words, it's just, we're out of here. And they do the Acapulco cliff dive, and then we do this. So this part is not auctioned. So the possibility, and it's not, it will, it might. The possibility is to come back in here and auction this. Check it, because we didn't spend any time here. This is not auctioned. So auctioned here, not auctioned there. So that sets up today, possibly, to come in here and finish this, and then either continue this or go up there, and that's not our job. Let's go a little further. So now remember where we are. Remember this level. Let's now go a little further. This is the ETH. So now you wake up, you come out of your coma from the weekend, and what do we know? Well, from Friday, RTH, we never got down to the target. And nobody knows, it could do whatever it's going to do. Instead, we opened in the ETH up here. What do we test? This. Too low. So now I have something. I have like an anchor, or an anchored input is what I call them. I now know I have too low. What is the language of the market? Well, if your mustard now costs here, this is the fair mustard price, and it's now too low, I can leave it. That sets up coming back up here. Now the shape of this distribution of volume in the ETH, we have something called a low volume node around 91, and we are rotational. So this is called balance. So then the idea of this is the possibility, let's look at the story, maybe too low. Price check in aisle 3. You ever go to the supermarket and they send somebody down to check the price? Too low. And what do we know about this area? Not auctioned. Let's go further. Where are we now? Still too low. And now we're extending. Where are we trying to go? 23 to 25. Not a recommendation, but that's the structure. Now there's more. Really? Yes. 65.17. Now this will get you. On this day, this was the fair price right here. In other words, highest volume. Going to the moon? Not so much. Now, where was the short in this day? Well, you'd have to see the ATH. Overnight, ETH high was right there. Isn't that interesting that the ETH low was there and we go up? Well, up here, the ETH high was here. We went down. So this set up shorts out of here. We were short all day on this day. Neither here nor there. And where was the target here? I'm showing you how this might work. 56, low of the day. What was this? ETH high, high to low. It was a fabulous day for Trader Lab participants who have an auction, understand the auction and have a plan. Well, let's look at this. Too low. This is like a direct hit. And remember, the auction is not precision. It is areas of behavior. So I always say it's horseshoes and hand grenades. There's no precision in trading. Those of you who are into prediction and precision, you're in the wrong business. There's a lot of slop. In other words, it's an area. Because if we come down in price, like we did Friday, and we don't know this until hindsight, don't forget that, and we miss it, it doesn't mean we won't come back there. And that's still open. But what it means is we found our buyers, and that tail tells us that we can do one of these. Now, here's Why is this important here? It was too high. What happened over here? It was our target coming up. Notice how it stops there. What happened over here? Clueless. What about this? 17. Important. What happens if we're below it? We can check this and we can check that. If I can clear there, whatever. Now, we tested this in the ETH. See what I mean? So this kind of puts you in the, what is the lean? Longs to get the shorts that are sitting in here. And then we'll see. So anyway, that's the lay of the land. And if you're in TraderLab, the idea of this is that you already know the levels that are important. And then you act accordingly. So where are these levels? There's the 17. Current high of the day is right up there. Remember, no precision. Where is yesterday's settlement? Not there yet. ETH mid, potential target. Outside edge of that low volume zone. Down there, that's the low side of it. And the upside of this low volume zone is there. I'm showing you again. So that's a potential obstacle. This would be the target. Okay? And it doesn't have to go anywhere. Part of the joy. This is the naked volume point of control. That was the ETH low. Then if we fall out, we can go lower. And this, we missed. I should say we touched it in the ETH. And then we have yesterday's low that missed that 50. So this puts everything, I hope, gives you a sense of the levels. Is everybody tracking so far? How we doing in YouTube and how we doing in the Bookmap Discord community? Are you guys tracking? Please give a like, by the way. Now, let's get into the RTH Open. Now, again, these are not trade recommendations. These are structured trades. And these are available to you, all of you in the TraderLab. Now, the idea of a structured trade is, guys, I hate to disappoint anyone. There is no plug and play. Wish there was. You wish it was. I wish there was. Would have been so easy. All I have to do then is get the guys to move the ATM in the basement. That would be my biggest problem, getting it through the door. But no, it doesn't work that way. So all of us thinking that somehow we can take indicators, just find the right mix, and we're gifted an ATM, I'm going to say, if it was that way, the failure rate wouldn't be what it is for retail traders. And you also have to ask yourself, why do they fail? So RTH Open. So what do we know? Upward skew, but the but is what? But what? Statistics. Grab a pen and paper and you got to vet these for yourself. We're opening higher inside of yesterday's range. What does that do for us? Well, there's a 98% probability we take out either the first hour's high or low. There's about a 98% probability we take out either the ETH high or low. There's an 82% probability we take out either the previous high or low. Now, this one, I want to suggest to you, we might also not take out either today. No clue, not my job. Taking out the ETH high, 76% probability. Getting to the overnight mid, a 75% probability. Getting to the previous point of control, 68% probability. But that's where, this is the previous point of control, but this is where the ETH low is. Are we going to, now, next thing for you to kind of stimulate your thinking. Taking out both the ETH high and low, a 33% probability. We have a 33% probability of taking out the ETH high and ETH low, and getting to the naked volume point of control, which is this thing, is 68%. How do you reconcile that? That's the question. I can't give you the answer. I'm saying is that's what creates the mystique of trading, because it's not black and white. And then there's this one that's naked at 50, where yesterday's ETH low is. Now, I'm sorry, RTH low. Again, What is the probability of taking out yesterday's or Friday's high or low? 82%. Are we going to take out Friday's low or Friday's high? Or neither? That's the question for this astute audience. I don't have the answer, but these are the things you'd have lined up in your trade plan. The questions cannot be answered. The probabilities can be, but you have to align with the market. Anyway, hope you got something out of this. This is trade prep, and I'm ripping through it. There's more to it, but this is before the market opens. So a long lean, the market is short. Who's on the hook? The shorts. If we open and we're higher in range, which suggests two-sided potential trade, and nobody knows, we're in a low volume zone. So that suggests the possibility of two-sided trade with the squeeze and clueless, okay? So now, and don't forget, the ETH sets us up to say that we might have found too low. So my thinking, and I'm going to talk to you about trades I would take, not necessarily trades I do take, but trades I would take. And by that I'm saying is there's other trades, but keeping it simple, but random. So let's try to figure out what's going on. And of course, we're all trying to figure out what's going on. So this is a way to do this. And it's not, there's not a right, there's just maybe. Maybe this is good, maybe this is not so good, maybe this will, I don't know. By the way, if you don't know, you don't know, then you think you know. And we're not in the business of knowing. We're in a business of maybe. Maybe it'll do this, maybe it'll do that, maybe it won't do anything. All right? So maybe. So let's look at this. This is sweep. This is a sweep. Now, the market just opened. So RTH opened. No clue. Yeah. Do you? Me? No. No clue. This yellow line is called the developing volume point of control. It is, and I'm going to label it. I do this the same way. One thing you're going to notice, you follow the stream, and I encourage you guys to, follow the stream or review it every day. You're going to see something that is not complicated. What you're going to see is operating in randomness. The thing about operating in randomness is something must be consistent. And for me, it's process and trade plan. That is, for me, the answer. I don't know the answer to what the market will do. No clue. So my job is not to be I know what it might do, and I know why. I don't know where, I don't know when, and I don't even know if. So if you can accept those things, you're in a much better place to be flexible. Let's look here. I get the sweep. The sweep says downside rotation. I'm opening here, and I have, let me just try to find another level here. Where is it? Must be covered up. Overnight volume point of control. Where is that? 1 second, guys. I know it's covered up. Where's overnight volume point of control, guys? I think it's covered up. It's 05? Okay, thanks. Yeah, it is. So the fair price in the ETH, which is the ETH or overnight volume point of control, is actually here. So what that tells us is if we open here, we're opening in a fair price. Remember the auction, it goes RTH, the fair price was down below, which we tested in the ETH, and now the ETH fair price is higher. So that tells me on the open, I'm anticipating two-sided trade because we're opening near a fair price. And I'm thinking longs. Now, the thing about this, and let's go back. I know you're going to go, gee, this is so much minutia. Can you show me a trade? What's the probability of the ETH high? Almost 77%. Past performance not indicative of future results. You got to bet everything. So I see this. This suggests downside rotation. What I'm looking to do is get long for this. The market is short. So let's see. So I have a couple aggressive trades here, which I don't recommend. And I always say to Trader Lab participants, don't trade the open. Let it set up. Get some volume in here. I take more stops in this trade, but it's a very advanced trade. But if traders can't get the primary trades down, which are mean reversion trades, outside and rotational trades, they're going to chop themselves up before 10 minutes goes by. So don't trade it. Observe it. Recognize it. Narrate it. No indicators here, guys. The only way I do this is I look at the language. The language says here with the sweep, possibility to go down. There's my sweep. There's a seller. I don't know. There's my VPOC. This is my first indication or suggestion. I don't like to use the term indication because that sounds like indicator. There is no indicator. This is too high. This is the language. Remember how the VPOC works. That's the retail price. Now, when I go down in time frame, I'm doing the same thing in micro. So what do I know? Sellers are here. Buy stops are going to be there for anybody who gets short in this leg. And this is the retail price. This is my mustard. Now, if the price shifts down, it means there's more interaction between buyers and sellers here. And potentially in the micro, this might be too high. It's language. So now I'm moving away. So I go, well, that's too high. But I think we might want to go up, and I have that high probability for the ETH high, how do I get long? Great question. So I'm looking for long. Just me. Not saying it's a good idea. You'll see why. VPOC migration, new retail price. So what does it say? Let's come back to the language. It says too high. Now I'm going to just move this a little bit. Too high. Let's look at this. Too low, too high, retail. I'm not paying that. We leave the store, and now we start a new auction. What's too high? I'm not paying that. See? So it's, we're out of here. You sure? Yeah, I'm not paying that. Get out of here. Okay. Now what? Retail prices here. Why? More volume here than there was up there. Now, the other piece of this is we can do that or do that. I know. Up, down. Brilliant. But we know too high. So now the new retail price is here. Oh, I got to label it, right? Right. So I'm going to label it a variable high volume node. By the way, if you have questions, put them in there, but I can't look at them right now. And you can always come to Trader Lab if you're inclined. There's a link in the bottom of YouTube, but there's no cost. So, too high. I'm out of here. Too high. Don't forget statistics above. Going south. Going to zero, Lewis, except, what do I know? I know I found too, in the ETH, I found too low. I'm inclined for longs. So I'm looking for longs for my first trade. Now I'm going to show you my first trade. My first trade is here. Here. And the goal is to go there and then get to the ETH high. Right here. Now my stop must not be here. It must be below here. So I typically go with this kind of a thing, 3 ticks under the outside. So might be stopped out. Okay, let's assume we're stopped out. Now, and this is not a trade any developing trader ought to take. This is something to narrate because you've got to clear. Now, what happens? I get the VWAP in mid. This is that's why this is an aggressive trade, because I can get sellers here. Now I get my sellers, and we're going to assume a stop out. Okay, let's get real. What do I know here? Isn't this the same as that? Just a little bit lower. I cross over again. This sets up along here or here, but there. And let me show you the trigger. I'm not going to show you this one. Actually, I am going to show you this one. I just want to show you structure. Okay, so bear with, please. I'm going to show you some structure. Now, I'm going to show you how you can organize information. It's not what you ought to do. It's what you can do, if it makes sense to you. So here I have my buyers. There's my absorption. There's some sell stops. Thanks for playing. And I come across this yellow line, which is my retail price. And I pull back and check it, and this shifts higher. So I have support, resistance, support, resistance. So if I bought it here, I'd be going there, and my stop would be 3 ticks below this. And I can't say whether you'd be stopped out or not. No clue. Let's see, 99.50. Was it 98, 99? Is that right? So you might, if you did this correctly, and by the way, means you vetted it, it's not what I would do, you would not be stopped out. But I'm going to say, let's assume we are stopped out, okay? Let's just be real. I come under, and what do I see? Let's look how this might work. If I have my buyers here, that's absorption, and I pick the stops out, there's 70. These are the retail traders who put their stops right there. And doesn't mean they're not, I don't know, But I get my sellers again. What happens again? Icebergs. These are not walls. When you have a low like this, retail traders like us, who are risk adverse, like all of us, are going to put their stops there. If the market comes down and takes their stops, I know we all think that they got me. They did it on purpose to get me. No, it's where you put your stop. If you pile your stop with the rest of the planet, it's, in my opinion, you're inviting. Because if we get these sellers here, the mechanical V, and they might be right, the VWAP and mid sellers, right? What happens to these guys? They see this, they bail out. So there's your selling. And then the guys who don't bail out, who teeth chatter, but they're paralyzed, they get stopped out. But what about the buyers? Well, if they think this was a heck of a deal here, and we get into the stops, you need the liquidity, the market orders for the passive side to re-engage. So if they think this is a great deal, oh, it's even better, thank you. They absorb, and now we come across again. So this sets your long up again. So if you took this, depending on how you manage trade, you take a stop. If you're outside 3 ticks, I don't think you'd be stopped out. Guy, Trader Lab, can you confirm 3 ticks under this swing? Would that be a stop? Then here, long again, and you have to come across. Notice where the structure is here. VHVN. Once I come across, this is my resistance. So I have support. You're either out or you're hanging in by the nails at the edge of the cliff. You got taken out, same trade, and you're coming here. And then, so you see, it's the same trade, just, life in the fast lane. Scale and then ETH high, which is a high probability target right there. This trade could be done right here. Is everybody with me? I just want you to see the first trade. Trader Lab, did that stop get picked? The first long, guys? How we doing? No stop pick? Thanks, Marty. Did it miss by a tick? So, guys, according to Marty in the Trader Lab, thanks, Marty. If you took the first long here, it would miss you by a tick. And by the way, what I suggest anybody does, look, doesn't mean anything, we all get stopped out. The thing I learned from my own experience over many years is that if I put my stop with everybody else, I get what I deserve. Nobody went after my stops. I'm going to suggest to you that you take responsibility for the outcome of your trades. It's nobody else's responsibility but yours. If you put your stop here, did they go after the stops? No, we had sellers. And Icebergs, they sell too. So they sell, and who knows, maybe it's just these guys, bing, bang, a couple thousand, how many thousand lots? Yeah, we don't need much. So, but mechanical sellers. So, but the same trade, so you wouldn't have been stopped out here, or you have your stop right here, you will be stopped out. Me, I don't do that. I left too many dollars on the table acting like a retail trader, So in the Trader Lab, this is a phrase that you might want to write down if you're visiting today in YouTube. Think like a retail trader. Don't act like one. When you think like a retail trader, you're remembering your own experience, assuming you can learn from it and not keep repeating it. Think like a retail trader. Where do I want to put my stop? Do you know who wants to put their stop there? Hyde's the lunatic who's under the hood. Jekyll and Hyde. Hides the risk adverse component of our DNA or our primal wiring. So we want minimum risk, of course. But in our business, it's not minimal risk, it's intelligent risk. Intelligent risk is different than minimum risk. Because if I'm seeking to avoid risk, I'm also potentially putting myself with everybody else. And typically, most traders who think like that, and it's not about not using risk management, it's about intelligent risk management. I need to be away from this. And yeah, I might be 3 ticks outside of this and get missed by a tick, or it may still stop me out. But I know if I'm not here, I've increased my probabilities of staying in the trade in case there is a pick. And the reason I do it is because I figured out through a lot of damage over the years that there's a reason the market comes here, and there's a reason that the buyers that are here are going to still be here, and they'll take advantage of the opportunity. They thought it was a good, think of it this way. If you went to the store and it was on sale and you bought it because you perceived it was too low, and it comes back to that price or a penny below or something, and it's still too low, the shoppers who are throwing 3 in the cart are going to throw a couple more in the cart, and now the price goes up, and you only want to buy on sale. So this was the price that was too high. That's our scale. And then north, and then this. Okay, so that's the first trade. Now, is everybody with me? It's very important that you see the logic. How are we doing in YouTube? Please give a like. Now, let's look at the next trade. Now, the thing about this is, because we're in this low volume zone, and we're right, this is the ETH volume point of control, the retail price. This is also, there's another piece to this, and I'm getting into multiple concepts, so it will confuse you. I'm going to ask you to just grant me a pass because you're going to find conflict. There's conflict because of time frame. So if we think up is the primary opportunity, depending on time frame, there's multiple opportunities in multiple time frames. So this is the primary target. So now, what now? Going to the moon? But in this trade, if you're trading a 2-lot in Trader Lab, and you have to vet this, the primary trade is long to there, and you'd be done. That's it. Finito. Trade done. Are you okay with that? I mean, it's like probably 10, no, actually, it's more. So, 01 to call it 5. That's 4 points, and then to here. Another 7. 11 points, 10, 11, 12, whatever, right? So, is that good for a 2-lot? Now, I'm going to show you something else. Now, as this thing is cooking, nobody knows what's going on, okay? And the other possibility is the opportunity in this thing is to come there to that 17 and up here. So these are the targets on the upside. This one, and this is the obstacle to clear, and no clue. So I don't look at this like I can predict anything. I've kind of gotten, after enough time doing this, that I go, I don't know. So I don't think about it. I think about alignment. So I'm always narrating. I'm going, well, where are the locations where I might get a reaction? That's all this is. And then based on what happens, and I don't know till hindsight, let's get over it. Nobody predicts anything here. You come to Trader Lab, clue us. I spent too many years trying to be right, trying to know what was going to happen. The need to know is not gaming. The need to know is fear of loss and FOMO and all that, and psychology of being right. No way. What this is an auction right here. I'm just going to put a little something here for you to see, and I want you to understand what you're looking at. Remember, in these I call these different time frames. This is the outside edge. This is the outside edge. That's the retail price, high volume. Up here, same thing, high volume. And then this, what's this? Too high, too low, too high, too low, high volume. If I leave this, then, and I don't know, don't forget, as far as I know, gone higher. Watch. Once I leave it and I can't get back above this, then I might have found temporarily too high. So what this tells us is once this gets rejected and I come under here and I can't hold this here, it needs to do that. If it goes the other way, then it's hasta la vista. And then the idea is, where's the longs? The stops are under here. So that sets up coming across and taking these guys out. See what we do? We take them out. Oh, wonderful. But now let's come back to what we know is too high. Too high? What else do we know? Buyers were here, right here. And I'm just throwing a little line on here. So what I know is this. I got my sellers to control there, because this is where the buyers were. Let's look at the logic. Why didn't it go up? Sellers. Do we know it? No. What do I know? Buyers. There's the delta. What's the delta? Buy stops. Going to the moon, Alice. Maybe. Break low. What was here? Buyers. Why? It went up. What was here? Sellers. Do I know? Do I know? Nope. When do I know? Here. Break. Let's look at structure. Too high, too low, retail, micro. This is your convenience store. Think shopping. Trading is shopping by the participants. What's too high? What's too low? What's fair? And it does it in all time frames. So microstructure or the whole day, it's all the same. It's Matryoshka dolls. They fit inside each other. There's my seller. There's my buyer. There's my change. Sellers get below the buyers. This now is resistance. And my sellers are under here. Stops. Take them out. Now what? Let's come back. Let's look a little further. Just going to show you some structure. This is kind of a way to think. What about this? This is where the sellers are. What about the buyers? I had them there. I have them there. And I got my sellers here, there, and there. What's this? Test, seller. I'm going to show you another little something that you'll find interesting. I always like to talk about this one. I don't use indicators. This is divergence. This is stops and icebergs. Now let's look at the delta. As long as you know, CVD fans and delta fans, this delta for me, I'm just saying in my time frame, it is not material. This is material. So I'm looking at delta. So here I have buyers and we're going up, buyers and we're going up. Some less buyers. I don't see any sellers, do you? More buyers. Going to the moon. Less buyers. Isn't that delta divergence? That's one piece. Then the sellers take control right there. You notice the buyers are here. They don't know what they're doing over here. The sellers take control right there. Now, let's look over here. A little fun fact and no intel. Buyers, who are the buyers? See, this is the question always. Are they initiators or are they stops? Different buyer, isn't it? But they show up the same way in delta. So you see your green bubble. Okay. But let's look here. Buy stops and I go higher, but I got less. That's your divergence. Now again, no, you can't tell this until hindsight. But what else do I know? If I extend this out, my resistance, I'm going to extend this. You'll see why. Now, what I'm showing you is not necessarily actionable, but what I'm doing is I'm narrating. I'm going, all right, I know this. Isn't that a trigger in the trader lab? Isn't this where the sellers were and the buyers were there? There's a sell trigger. There's a sell. Stops have to go there. There's a sell. Stops got to go there. There's your divergence, you see. and then where you're trying to go. You're just trying to come across the range. VPOC migration. Come outside. Watch. Where's our location? Now, you could be taking these, you know, and if you took this, for example, you're coming here, and then you're coming out the bottom. You come here, you're coming there, and you're coming out the bottom. And this is a sweep, suggest the downside rotation, and you're coming to there. Where's our resistance? There. Any trades you're taking in here, stop's got to be out here. If it doesn't fit, you don't have a trade from a risk reward. Come up here. I can't get above the sellers here. I can sell this. Here is the trigger, right? So resistance, break, choppy chop. If I don't get above here and I get my next trigger, where's my resistance? It's there. Stop is there to there. Structured trade. Okay. And the target is this. 75%-ish probability. And it doesn't quite get there. Now, in Trader Lab, we were talking about this. This is called mean reversion. Now, remember, there's an upward skew, right? So subject to your plan, you could be on these shorts, or you could never take a short. You could just be taking longs. This is really where your individual plan comes in. You don't have to ever take a long. You could just take a short. You could do whatever you want. You could do both. If the skew is long, the only longs I've had, if I'm only trading longs, was at the open. And that's a very aggressive trade. I always suggest developing traders, don't do it. Don't trade there. It's too fast. There's no structure. Now you notice that we've had some time to rotate, that we have structure. It gives you more to work with. So if the skew is to the upside, in this, I saw this one. This sets up a long, but this is more difficult because you don't know this. Let's look at the statistics again. To get to the ETH mid is 75%. So this was the area, and the low volume zone, the bottom of the zone is down here. All of this is the area for longs. A area, not the, but a area, because we don't know. Now this here is like catching a falling knife. So, but let's look at the structure. And this is not necessarily a trade anybody ought to take. It's just structure. We don't know. Let's just do this. So now let's go look a little further. I'm going to take you down into micro. So as this is developing, as far as we know, let's look what we know. Sellers, sell sweep, counter rotation, nothing. Sellers. So buyers are there, sellers are there. Break. Where's my micro high volume? It's right in there. My sellers are here. My sellers took control. My buyers are there. Where's my resistance? I'm going to draw a little something and then erase it. I want to show you how far you can go with this if that's your inclination. Sellers are there. Buyers are there. Trigger. Volume is there. Too high. Break low. Where's my volume? It's in here. Too high. Break low. Where's my volume? It's in there. Too high. Break low. See what I'm doing? Now, I'm only doing this as a way to show you that you can take this anywhere you want, is when you understand what creates this movement. Now, it's not saying you should trade this. What I'm saying is you can, when you understand it, it's a language. You can use the language, and then you can stay in alignment with the language and then recognize change. The whole idea of this is, where does it change? There's resistance. Where did it change? Well, I got support here. I got resistance there. As far as I know, it's going to zero, isn't it? Uh-oh, change. Now, where's my volume? It's here. And I got a little down here, but let's look at this one. Just see what it does. So right here, it's going lower, right? Break. The sellers are here. The buyers are there, and there. And only in hindsight, I see the break. That's my trigger. Now, my volume is sitting in here, and this is where this would fail. See? And what else do we know? I got buy stops here in this leg. So the way it works is if the market goes up, there's stops under here. If the market goes down and I take out these guys, then I can have stops on the other side of the swing. So when you're trading two-sided trade, I'm now going for this, because that's where the fuel is. And now I get over the ETH high. Okay, wonderful. And we have something else here called the initial balance. The initial balance is the first hour's high or low. Now, because the skews to the upside, I mean, and it could do either. You know, this is the thing. You could do anything. This is not about predicting. Remember that. It's about alignment. This is a hard trade in the sense of this is a 75%-ish probability. So what makes it hard is, you know, are we going to get this? But this is the area. So when I see this, I already, right here, I know I might have a long, and it's harder for me. But as long as I got enough range, I can trade this. And then I'm looking to come across the range. And don't forget, I'm trying to go up to there and to there. So that's the trade. Now I'm going to show you something called the IB continuation trade. It's a structured trade in the Trader Lab. At 9:30, my time, Central Time, this trade comes into play. And it could be from either side or both sides. No clue. Market never has to take out yesterday's high or low. We can have an inside day today. Very possible that it just, everybody mellows out and, you know, takes a deep breath and we just rotate, which sets up two-sided trade. And that's all posted in Trader Lab. So, and that would be called the neutral day. About a 30% probability we take out the first hour's high and low. And remember, this is the first hour's low, and this is open, which we tested in the ETH low. We might come here, or we may not get here. So that's not my job, okay? But I know what might happen, and then it's all about alignment. So the first hour's high gets taken out at 9:30, the first hour, or low. It can take out either one, 98% probability. So 9:30, the IB is set right here. And then I take it out and pull back. Now, this sets up the possibility, well, two possibilities. So I come here, I can come back in. That's called the IB failure, which would be okay. Or because the skews to the upside, I'm going to look for longs. Because I have 17, and then I have that other target at 23, 25 of above. So for me, I want to be long. Just saying. Not a big deal. So 9:30, I break. I have my IB extension, the trigger. Now I pull back, and this sets up the long right here, against this compound for a long. Let me show you the trigger. Now, the thing about this is we have structure. So the buyers are here. The sellers are here. That's my resistance. My IB high, look at the beauty of this thing. You know, this is like where you should be doing your screenshots because there is method in randomness. So I have the ETH high. I get a, and that's where it set up our short, don't forget. But this, since there's a long skew to this thing at the time, we want to take the longs. Break, IB continuation long is here. So right here, you get a sweep. This says counter rotation. If you took a long in here, you would get whacked, pulls back here. If you took it right here mechanically, you would take a stop, just the way it is. It pulls back. Now there's another, now right here, no idea, okay? This now is resistance right there, break high, IB continuation trade, same trade. If you took it here, you take a stop. You take it here, same trade, just the way it works. Long, and then you're going up. Where's our support? It's at the top of this where the sellers were. So what you have here is absorption, break, support. Sellers are there, right there. And we overtake the sellers. This delta here is where it was absorbed. There's sellers here. I'm going to draw you a little, just a little something so you can see how you can read it and then try to use the levels. And the reason I'm looking at this is because I had a seller there. But why? What happened here? I got my buyers, so I got sellers and buyers. Break high, then the volume in here is here, there. So this is your, like your VPOC or fair price. If it's too low, I can come back and check it. So support is there, and the trade fails under there. And you're trying to go for 17 or higher. This comes in the book, no clue. What happens here? Hopefully you have a trade management process. I don't get into that because some traders are going to be long to affinity and not do anything. Other traders are going to be managing. So as you're going up, these are micro structures. The volume is in here. So it's here. That's your support. This becomes resistance. Notice just how the behavior operates here. Just going to draw a couple little things for you. So what I do, and again, you have to decide for yourself, you know, what you want to do and how to do it. So this is too high. Buyers, sellers take control. Where's my resistance now? It's there and here. So I don't know. Now, it's the same as this. You see how it works? Sellers were here, buyers were there, break high, support, 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 high. Going where? To the moon. Who knows? Sellers are here, buyers are there, break low, resistance now is here and here. See where we come? Same thing. Long, no precision, guys. It's not that neat. Sellers are here. Sellers take control. So you have sellers here. You got buyers there. So you got longs there to there, and then north. There's no reason, at least for me, not to be thinking longs until it fails. And it doesn't fail for me until there. Okay? VPOC migration. What do we know about this? When have we seen this before? I think I'm gonna jump to real time versus this, but all we're trying to do here, so you understand, is this is too low. Let me mark this thing. Because I haven't seen any of that. So right here, we have our VWAP and all, and this is our retail price. We come down, we don't get there. If you don't have a trade process for this, there's nothing to do. You work on your crochet. We have a sweep there that suggests rotation up. Come up, variable high volume node. When this shifts, this is an important thing. There's two possibilities. You're going to move that way or you're going to break here. If you break here, that suggests the possibility to come there. Why? I'm not paying that. Yeah, but it's on sale. Target. So if you had a way into this, and you might not, I'm not saying you would, This is a short, stop has to be there, and you're going here. Why? Because we rejected it. We reject it, we come back. So these act like support and resistance. So this trade could be done down here, right there. That's a target. The other part of this trade is if it could also be a long. Why? We're shopping together. Push the cart, will you? Now we're going into two-sided trade balance. If you took a long here, which is not a recommendation, you're looking to come back up here. And it may not get there. It may stall right here. It has to clear this to go there. That would be the target. Let's see if it does it. And I think I am in real time now. But here's what's important. Why? Why? Because we found too low. And as long as I'm above this, I can return higher. And the outside edge is out here. So I could come up here, but I have to clear this because that's my, let me get this out of here so you can see where these levels are being generated from. Here, see? So if I get long against here, I have to scale here. Same reason this might be too low, this might be too high. So when I structure these trades and I think about them, I'm thinking about, well, I can just, here's the thing you can do. You just take the short from there to there and you get back in your Barca lounger. Or you take the short and you're flat here and then you take a long and you got to scale there. Or you have no long. I couldn't tell you. 17 was the key price, right? And if we can't come back across the range, any longs I'd be taking would be coming here at the moment. And I'm not saying you should be taking anything here. Remember, there's 30% possibility we come out under here. And everybody is equally abused today after Friday. So let's see what it does. You guys have questions? I can take a look now. Thanks for your patience. And welcome to Trader Lab if you're visiting. Appreciate you guys stopping by the lab. How are we doing in YouTube? Please give a like if you get something from this. Appreciate it. So this is our last support area. There are some advanced processes here. I don't like going into them, but I can't help it. Getting under here is very important. So if this is too high and I don't hold this, then this is too high. That at the moment is too high. Let's just see if something interesting happens here. Not trade recommendations, guys. We all take stops, so it's life. So now potential for counter rotation. Let's see if we get it. And this is the area and this to observe. So what I'm doing is not complicated. The market's random. I have to be anchored. I always talk about anchored inputs. So now we want to watch. We have the sweep. This suggests the counter rotation. This is how you can use some of these order flow tools. I'm a minimalist. So there's much more you can do, and there's many more tools in Bookmap. And there's other things you can do that you can integrate. But again, I'm only talking about me. Everybody finds their thing, you know. And it's not that you can't use indicators, but most traders, you know, most of us all walk in the same, you know, take the same path. We think this is a business of time frame and indicators, and I'm going to suggest it's not. It's you really need more. You need to understand how the market works, where and why. And this is what makes the auction so, I think, unique, is that it is the actual what's happening in the market, not some backwards looking lagging indicator. And we all try to tune and tweak because of the randomness. Well, not saying you can't use them, but if you don't really know how the market works and you're depending on something else to translate that behavior, you're going to be in the same place most other retail traders are. And I think that's not an advantage, but again, that's me. What do I know? What does my indicator tell me, by the way? Does it tell me to get long here? Does it tell me to get short there? Does it tell me this is an important level to lean on for a short? Did it tell me that? I don't know. What did your indicator tell you? Me? That's all. Not a recommendation. Does it make some sense? How are we doing in YouTube? So for me, and it's not a recommendation, once this happens, then here. And then it's attempt to get risk neutral and look to take the stops out under here. I still have that 75%-ish probability, and this is my outside edge. I do have a high probability of taking out either yesterday's high or low, 82%. I'm not overly thinking about that. I am thinking about something called a neutral day, 30% probability, which means take out the first hour's high or low, clueless. That's a day that's two-sided. Nobody's really taking control of the ball. What do we know so far? That's important. This was an important level, and the probability was to get here. Now, when I say probability, it's because it's not auctioned. But this is key. So now, south of the border, shorts. Last short is there. Not a recommendation if, and then all this and maybe more. So now it's trade management and take what the market offers and wear a helmet. Possibilities exist. So now we're going to have a neutral day. Here's the possibilities. Come out here, come back there, or here and wherever. Is everybody with me? You guys have questions? Post them. I'll do my best. Thanks for visiting Trader Lab, guys. I don't think trading needs to be any more complicated. It's random, so that I think we look at randomness as complexity, but it's not. Complexity is, I think, how we describe randomness. If you anticipate randomness, then you're going to attempt to solve for randomness. That's what the casinos did. They solve for randomness. They only play games with an edge. So once you vet trades, setups, if you want to call them that, then you know when they're qualified. It isn't something crossing over something. What's the condition of the market? Your indicators don't get that. That's not their job, and they don't certainly have the capability. Trading systems, early on when I built trading systems, I was trying to solve for that. I thought if you threw enough coding at it, that you'd be able to optimize it. By the way, where did this come from? Why is that there, Tom? What does that mean? What does it mean? Where'd that come from? There. What was here? My buyers. Isn't this the long that took us to the high of the day? Well, what might happen if I come back here, Tom? Let's see. Why do you draw those things, Tom? Because the buyers were here. The buyers were there. This is the pick. There's that. What's over here? The buyers are here. What might I anticipate? The buyers. 431 stops. Thanks for playing. You get a coupon to the buffet. So what do I know? I know my buyers are here because they came twice in this area. I know this is my fair price. And I know that this is an important level, that if I was taking shorts, I have to be looking to the left. Write this down. Look left. Because if I don't come outside at this time, then I can come back there and rotate. Remember, now this is my outside edge. It's called the low volume node, and I can do this. Now I'm suspecting, that we're going to get the IB, which I don't think we have gotten. No. So I suspect, that's all I got, that we're going to take out the first hour's low because there's stops under there. And we're in two-sided trade. So that's not what you call a bullet train. It's two-sided. So if I'm in two-sided trade, I can just anticipate the rotations and then trade the rotations. So if I put a trade on here, I got a scale there. I still suspect, underline, that we're going to take this out because we already did our thing and we hit so far the 17 level, which is a important level. That's kind of where the high of the day is. So we don't get over that, then we can take the longs out. Everybody gets equally abused. And that's trading. That's why these are important. That's why I draw them. Because are you going to remember this? I'm not. So I do this. I put this down here and there it is. And then if I come down here, I know that there was buyers here. So I have to do something with this. I have to scale. So, and I can work with this. I don't have a problem with this. But if I come back here, I'm now mean reverting. And if that's the case, then I can look at it out here. If I come out here, I'm going to be doing this kind of trading. Because why would I be taking shorts? And it's not a recommendation. Market can make new highs. We are in a higher time frame bull market. Who knows? If I come back to this, I can come across the range. And this is now is the outside edge. This is called the low volume node. So it'd be this to this and potentially out the bottom. That's kind of where I'm at unless this structure gets violated. So I can be looking out in here or out in here to there to there. That's my trade. Not a recommendation. And it doesn't have to go anywhere. It can just come back there and there. So this is my areas to observe. If they're too high, I'll break down. The better location is out in here to pick these guys off. Their stops, and this is called the low volume node. And that sets up mean reversion from the short side. Pick one, So let's see how it behaves. You guys have questions, post them. Let me try to, I've got to move some stuff around on my IRT over here. So I can see some stuff. How we doing in YouTube? Hope we're getting something out of this. I can't say, that we're not going to go back up, but currently it appears we have, we can still, the thing with this is we can still get the longs out and then come back across. So the idea of today is the possibility for a neutral day. And that's just a possibility. If we take this out, then this is the target. This is the original target at the RTH Open that I went over. You can review the stream. You can kind of see how it lays out. The thing about this, about trading, at least that I found, is I want to know what the general idea of the day is, which is a long lean. But because I trade both sides, I'm a day trader. I can just trade one side. I can trade both sides. It doesn't matter. You can do the same. When you're developing, it's always best to try to pick a side and then develop the discipline to wait for the trades in alignment. Okay. Do you want to be long or do you want to be short? What's the evidence so far? The evidence suggests longs. But if I go into balance and I'm in two-sided trade, I can easily just slosh in this thing, not go anywhere in the market. And that's fine. It's just now as a day trader, I'm trying to stay in alignment. And I know a couple of things. I know I got too high up here. I got too high over there. and I got retail right here. I know I can take, and the longs are vulnerable at the moment. Remember, where's the fuel? It's under there. So any shorts I take, I'm aiming for this. That's all I can tell you. After that, I'm sticking to it. And if you don't have a trade here, there's no trade. Okay? You don't have any trades here, unless you have a methodology that allows you to operate at that location that you've vetted. So for me, the short objectives are down here. And I don't know where, but down in here. Let's see. So how do you handle this trade? This is the big question for all of us. What do I do now? Do I stay in this if you think the trend is up? Do I only, and what am I trading? Am I trading this being too high in the sweep? Am I trading this is too high here? Am I trading that is too high there? Am I trading this might be too high and I lean against this? Am I just holding a short? I'm asking you the questions because the answers are not made up here. You bring your plan here and then it's whatever, you know. And if you don't have a trade here, you're just sitting waiting for your trade. It's like waiting for a bus. I could tell you where my trades are. I don't want to tell you where my trades are, but I'm going to say structured trades. If I tell you where my trades are, I do things that are not all here, you know, in this stream. But basically, this is important. That's very important. That's very important. And knowing the stops are under here, this is why this is a target. So when you're thinking about trades, one of the things that I think is really important is you got to think about if there's shorts in here, where's their stops right now, wherever, here, there, there, there. Where about the longs? Where are their stops? Under there. And we have a 75% probability of that. And taking out the, you know all the statistics I already gave to you. This may have some probability, then you got that, over 60%, 67%, I think, to go there. Don't know. There's about a 30% probability to get the ETH high and low, and ETH low is right there. So we may never get here. That part's not my job. My job is to try to stay in alignment, manage the trades, take what I can get, not try to pick the high and the low. No skill at it. I don't think about it. Just not my thing. If it happens, it happens. To me, if I'm going to sell near the high of the day, fine. Can I actually sell the high of the day? No. Sometimes the target is the low of the day. Like these days I showed you. Like this. That was the low of the day. That was the target. Can't sell the low. Doesn't work that way. You can buy near the low, or you can target ahead of it. Friday's target was here at 50. I don't know. What's the low? 53, 52. I don't know. Whatever it was. Missed it. If it would have touched that, that was a target. This is the ETH low. Are we going to come back here? Maybe. You see? But there's the 17. Is that too high? There's the 17. Is it too high? That's the high of the day. So you see how it kind of works? And again, we don't have precision, so we can't have that. Sorry. When you like it, I would. I'd like to just sit back here and have a printing press in the basement with the ATM. Both of them can be next to each other. And again, it doesn't work that way. The way it works, though, is if you understand retail trader behavior, think like a retail trader, don't act like one. All the longs that are in here currently, if they are long, have their stops under here. Where was the last long? There's where the stops are. Here's the last long. Now you have a short. Where's your support? It's here, there, which came off of this. So that's your support. And And the idea is to come under here. And the reason is you got every long in here with sell stops under this low. So for this astute group of traders, and of course we don't have to do anything, what do you think the possibility is to take this out? Are you, even though we think longs had it, the edge today, and it doesn't matter, do the longs still have it, or are the longs now vulnerable? How about Trader Lab? Why don't we, let's think about this. What do you think? No wrong answers, by the way, because we don't know the answer. How we doing, guys? Are we going to take these guys out, or is this too low? Are we going to get to the overnight mid and lower, or is this too low? This is support. Is it too low? Interesting question. So here's the thing. I couldn't give you the answer. The reason I was asking a question is they're all correct. That was too low. It could be a target, or this is your target and you're going for the Acapulco cliff dive, an extension below, and then maybe because this is support also. These are areas. So I know this is too high and that's too high. So that I know that. I know I've got stops here at this swing and above here. If this is too low and I clear this, I can just rotate out here. So if I come out here, I'm going to be looking at a short to there and maybe out here, unless it just keeps going and then everything, gets thrown out the window. But if you're developing structured trades, I just got to take them piece by piece, from here to there to there. Break low, you could be taking your short, down to there. You get your absorption, and then if I come across here, you could be out of the short. You might scratch it, or subject to how you manage your trade, because this was a short, right? So you'd be going, to here. Come across here, you could be out. Come back here. It's all up to you. And if these rotations are too tight for you, then you have nothing to do. You just sit and wait. My inclination, and it's not a recommendation, is that this. But it doesn't have to. We can come all the way back across and keep going up and take out 17. There's no prediction. I just know that this is key. So if I don't get there, I can get there. If I get through this, then I'm continuing on to 23 to 25. These are targets potentially for today. So far, that's the obstacle. This is the next area. If I get through there, I got that. If I don't get back above this, I got down here, and this is possible somewhere or not. There's 30% possibility to get under here. Doesn't happen, sailing air. That's trading. You guys have questions? How are we doing in YouTube? Please give a like if you're visiting. Yeah, vulnerable. I agree. So we're back in balance. So the market is liking this location at the moment, and we still have the stops under here. So this is one thing to be thinking about. We did not get them on this try. We have now more longs coming in here. So there's going to be more stops down here, and we have to look for the squeeze coming across. The trade for me is going to be out here, and to see the behavior out in here for a rotation. That's called mean reversion. This is also mean reversion coming back to there. That's the mean. So it'd be short to there, and then maybe out the bottom. Or if you think the trend is up, it could be long to there, and then to there, and then wherever. So you've got your choices. There's not a right or wrong in this. It's just the edge, and whatever happens, happens. That's it. We can't predict what's going to happen. So there's no way to do that. This. So does that make sense? Kurt, you think the longs are vulnerable. I agree. And so are the shorts. It's in two-sided trade. The idea of this is when we're rotating across this, it just says we found a fair price at the moment, and the market is auctioning the price. Like, what do we think of this? Well, this is too low at the moment. Buyers are here. There they are. This is fair. Now, what was too high? There. And where's the stops? Mid VWAP. Where's our last outside edge? It's up here. And the low volume. So for me, this is where I start looking if I'm going to take a short. And that's not a recommendation because anybody, we all take stops. I take them. So. But here's a little something to think about. Let's forget about this being right. Not part of the business. Being right is bringing a trade plan that you've created outside of this real time, and that you follow the plan, and that you've defined conditions. And when those conditions exist, something is true. In other words, if this, then that. But if not, then what do you do? Well, if we're in two-sided trade, then what? Then rotational trading. Where's your next trade? It would be out here, Tom. And why? Well, that's too high. This is the outside edge. So if I'm going nowhere, I'm going to do this. If I get through this, then I'm going to squeeze out the shorts. I have my long stops under here. So I have this scenario already. So let's come back to what the language is. Too high. Variable high volume node. I'm going to throw a little line on here. I'm going to get too many lines on here. So this is my outside edge. If I take a short out in here, this is really the area I got to be aware of, because I can push through and come out in here and still revert back here. So for me, I'm looking here, but I have to be aware that if I don't come back here, then the buyers are still. Don't forget, the higher time frame trend is long. It's bullish. Now, what we do today, because this is what we're trading as day traders, is up, is always up for, we have to find out what it's going to do. Is this going to be the low of the current low of the day? Maybe. I suspect. And all I have is suspicion that we're going to take this out. But it doesn't mean what do I do about that? Well, I take my trades, I take my stops. No different than you. That's trading. It might not be what you're looking for. It's not the answer that the marketers and influencers give you. I'm just giving you what 46 years of trading has taught me. And that is not to be attached to being right. Be attached to following the plan and be willing to pay to find out. Am I willing to take a trade at a location that I understand? And do I understand that the market goes up to go down, and it goes up on the shorts and it goes down on the longs? Any final questions? And please leave a thumb up if you're visiting in YouTube. Use the link in the bottom of YouTube if you want to visit the Trader Lab community. There is no cost. You won't be solicited or otherwise abused. It doesn't matter how long you've been trading or what your methodology is. What does matter, if you're interested in the business of trading and potentially creating sustainability, working in a professional community, everybody is welcome. Trader Lab is an advanced trading process, but it is not complicated. What's advanced about it is you need to actually understand how the market works, why it does what it does, and how to get in alignment. And I'm going to suggest to you it's not based on your indicators. The primary piece is understanding market mechanics. Then you can align whatever tools, but you have to vet them to know you have a statistical edge and not sit on the side with the gamblers, but rather sit on the side with the house who only play games that have an edge that favors them. Thanks for visiting the Trader Lab. Please don't forget to leave the like and support the community. Visit the Trader Lab, and I look forward to seeing you guys tomorrow. And don't forget the like. Supports the Trader Lab. Thanks.